Welcome to this TFD Initiative webinar. My name is Andre Kastaman and I'm part of the ITFA board team leading the FinTech committee. And TFD Initiative is one of our strategic market initiatives aiming to attract institutional funding to the trade asset class. So today we're going to talk about bridging liquidity to bringing liquidity to supply chain finance platforms through tokenization and digital assets. And indeed, it's about bridging two worlds, the world of trade finance, the banking world, and the world of capital markets and now also retail markets through various mechanisms. But today we're going to focus specifically on one new mechanism that we refer to as tokenization and digital assets. We welcome today ITFA members, so no need to introduction to ITFA for those, but I'd like to share a few words on ITFA for those participants joining us today from outside the community, from the XDC community, mainly the blockchain community. So ITFA is a market association and focusing exclusively on trade finance. We started 20 years ago in the credit insurance, distribution, bank-to-bank, FI risk distribution space, but evolved over the last few years on the origination as well. So these days we have a number of committees and initiatives focusing on progressing regulatory advocacy, technology innovations, technology partnerships, and growing the ecosystem, enriching the ecosystem to address strategic market ambitions. And TFD Initiative is one of those, focusing indeed on the ambition to attract institutional and retail funding to the trade asset class and demonstrating that those banks and platforms active in trade finance are willing to partner with liquidity providers in running their businesses. So making trade finance investable through a variety of distribution mechanisms. So a few words about the ITFA sponsors. And that's a standard slide you will see in all the webinars. So a few words of thanks to those sponsors, website sponsors here. And this is also accessible to any ITFA member to become a website sponsor. If you want to raise your visibility as a member, we also have our annual conference where our speakers of today have already spoken, and next time is going to happen in Portugal, of course, and you also have opportunities as members to showcase your capabilities through sponsorship, gold, silver, and bronze. More details are available from our team in the ITFA Secretariat. So just a few words of introductions of ITFA. And let's now introduce our panel for today with Ian, Niels, and Billy. And I'd like each of them to introduce themselves first. So starting with Ian.
Hi, Andre. Ian Duffy. I'm the founder and CEO of Accelerated Payments Ltd. It's a company based in Ireland. We formed it 4.5 years ago, and we specialize in funding small businesses through selective invoice financing. We operate in Ireland, the UK, Canada, and the US. And since inception, we've financed over 600 million euros worth of invoices. So we're looking forward to this year, hopefully a more normal year than the last couple of years. And we think there's going to be significant growth in the SME funding sector for companies such as ourselves.
Great. Thank you, Ian. Over to you, Niels.
Yes, thank you very much, Andre. Great to do another webinar together. I'm Niels Behling. I'm one of the founders and the CFO at Tradetek, and we are a syndication platform for chiefly trade finance assets. We provide banks and non-bank originators with technology to interact, transact, and also efficiently connect with investors in trade finance, non-bank financial institutions, and other professional investors.
Thank you, Niels. And Billy? You're on mute.
Okay, thanks, Andre. Yeah, so I am Billy Siebel. I'm head of ecosystem development for Zinfin and the executive director of the XDC Foundation. I represent the XDC Network. We are a blockchain network that is supporting, really as a trade finance focused platform, is working with Tradetek and the TFD Initiative. We're really supporting the tech stack behind the initiatives that Tradetek is really trying to do within the TFD, and working with Accelerated Payments and other players in the ecosystem.
Thank you, Billy. So before we get into the panel discussion, indeed, the goal of the TFD initiative is to create a community of trade originators, but also non-bank originators like funding platforms such as Accelerated Payments, but also their partners on the credit insurance side and institutional funding side. So creating this community is important because the goal is to bring as much liquidity to the trade originators as possible, not to the corporates directly, but to the trade originators, those who service the end customers, the large corporates, the SMEs. We also include basically service providers, law firms, consulting firms, technology firms, and we are, as Billy just said, aiming to deliver a technology stack, because one technology cannot do it all. So the technology stack, indeed, last year has been growing with the addition of the XDC network that Billy represents today, in order to deliver the most comprehensive set of distribution mechanisms, channels, you could name them, to reach an ever-growing number of funding sources. And with tokenization, we believe we can tap into additional funding sources, which we're going to discuss today. So this technology stack will definitely continue to be enhanced, because when we're talking about, indeed, end-to-end automation, integration into the back office, as you would expect, the booking systems on the banking side, the portfolio management systems on the institutional investor sides are critical systems to integrate as well. So we aim to foster continuous collaboration with additional stakeholders in the end-to-end distribution process. So definitely we are welcoming additional members in the TFD initiatives. They could be banks, capital market firms, and credit insurers, but also, as I said, additional service providers. And indeed, we will soon be announcing the recent members that we have attracted over the last few months. There is a dedicated website that you see here on the slide, tradefinancedistribution.com, where you can get more information, such as the list of members that you see here. And truth is, most of the work is done on an individual basis. Each member in the initiative decides to join and explore, to join and pilot, to join and move into production on their own or with additional members on one-to-one relationships and then one-to-many relationships. It's really up to each member to drive how it wants to benefit from the technology stack that TFD initiative delivers. Growing the size of the market is really the objective, which is why we want to attract new non-bank funders. As I said earlier, maybe I insist too much on this, but that's actually the end goal, is to bring as much liquidity. And for instance, recently we had Allianz Global Investors joining, Santander Asset Management, and NIP as major investment management firms focusing on trade finance as an asset class and running really trade-focused, trade-dedicated funds for trade finance and aiming to bring liquidity to originators. So community building is definitely here a major objective. So before before I tell you more about the TFD initiative, because there is more to tell, I'd like first to get our panelists to share their role in the TFD initiative. So starting with Niels, if I can ask Niels to introduce Tradetek first and identify its role in the TFD initiative indeed.
Yeah, thank you very much, Andre. Tradetek was very much one of the founding members of the TFD initiative, together with a few large banks. We were there from the very beginning. And as I mentioned in my introduction, Tradetek's mission, if you will, our theme is really very much about connecting, interacting, and transacting, and allowing our clients to do that in a very efficient manner. And the TFD initiative, of course, is all about distributing trade finance. And to do that efficiently, you need technology, you need a platform, and that's exactly what we provide. And we do this across a number of products that are all related. We provide tools for a very efficient distribution of traditional trade finance, FI risk, as it's sometimes called, financial institutions risks, as it's sometimes called in the banking space, or core trade finance is another term you might hear. And then, of course, we provide repackaging, so really the transformation of trade assets into investable packages that can be bought by investors in the capital markets. And all this really is sort of a technological backbone that we provide to the TFD initiative members and our clients.
Thank you, Niels. Moving on to Ian, can you tell us about indeed the role of accelerated payments beyond your initial introduction a few minutes ago?
Yeah, so our core offer to the market is to fund small businesses, and so as an originator, that's what we are focused on. And obviously, as the book grows, and we grew 100% last year, we expect to grow another 100% this year. We continually require access to funding pools in order to provide liquidity for us to purchase receivables in the market. Obviously, in the area of what we're talking about this afternoon, it's a significant growth area in tokenized funding, and we see this as very much part of the market now and into the future. And we should be pioneers in terms of accessing this market, understanding this market, because again, access to capital on an efficient basis is paramount for us in order for us to continue to grow our books, and also for that to be cost effective and efficient and accessible. And those key characteristics are very important for us.
Thank you, Ian. Billy, on your side, you joined TFD Initiative last year, and you're part of the technology stack. Can you tell us more about the role of XDC Network?
Absolutely. So we really work very closely with Tradetek to take the technology that we've put in place on the blockchain and make it accessible to all of the participants within the ecosystem. So when we're looking at taking traditional notes that are offline and bringing them, or off-chain and bringing them on-chain, we're working to provide the backbone of that with a smart contracts tokenization platform that allows us to really do the trade and tokenize the asset into an NFT, which is what we had accomplished back in September in working with Tradetek. And with that platform, we're continuing to develop it to add more features and capabilities so that it's much more forward-facing, I think, really kind of bringing blockchain to legacy systems so that more traditional institutions and non-bank lenders are able to really access the platform with ease. And we're able to accelerate the volume and the size of the transactions that we're doing.
Thank you, Billy. So let's go into the details of the first transaction that was performed last year in September on the basis of the enhanced technology stack. Ian, can you tell us more about the importance of this transaction and how, from an implementation point of view, what it changed for you?
Yeah, so it's the first transaction is always the hardest one, Andre. That's the one you want to get done. And so it was a US dollar receivable, circa $160,000, with a very credible buyer. So it was, from a credit risk perspective, excellent. And that was from our side. We didn't have to change parts of our transaction and our process. It was really where we got our funding from, and we got our funding in this instance from the Tradetek platform, and we saw that just as we would have seen our current funding vehicles, which are more traditional notes through SPVs. So it was a very straightforward transaction for us to do. We very little change at our back end. We just recognized an alternative from a funding perspective. So it was very easy and very clear what we were getting into. So yeah, as a test case, it was excellent and straightforward.
Okay, very good. So no need to basically change the accelerated payments platform itself. No need for you to handle the tokenization. Much more done on a transparent basis for you.
Correct. Yes, and then I think the exciting piece, which is part of the benefits of a tokenized funding mechanism, is it does provide end-to-end visibility. We're a little bit clunky at the moment, but that will come quickly for a funder, potentially directly through to the actual individual asset or invoice in this instance, and that's very powerful from a reputation perspective, but also from a if there's impairment or issues with the fund, that gives a great degree of confidence in terms of ownership of assets. If for some reason problems arise, so it's very powerful as a tool for investors, and again, from our end, it's very straightforward for us to engage with.
Okay, indeed, it's true that traceability and visibility throughout the whole chain seems to become even more critical, given the recent cases we have seen in the market across some originators. So Niels, on your side, what has been the reaction from the market? Do you expect additional originators to get interested through this channel?
Yeah, absolutely. I think the reaction was overwhelming. I would almost say was very, very positive. I think especially because the way we worked together with Billy and his team, with Ian, and really had all the ingredients lined up in a very efficient way, and in a way that was very well thought through. That got us a lot of good feedback, and as you can hear from Ian, he's sort of the user. He's the end user of this. His clients, the corporates, are the end users of this, and of course, it's all about getting funding to them in the most efficient way. And that's what we hear when we talk to other participants in the market. Everyone is very interested in. And one thing that maybe highlights that, I was speaking to some of the great people at the GTR magazine that, of course, we all know, and they had a feature on this first transaction in last year's one of last year's editions, and I think that was one of the most read, if not the most read, article of 2021. So there's huge interest. And if you do this in a way that really makes sense and maintains all the good elements of the traditional world, but then introduces new elements to make these existing elements even better, stronger, robuster, which is what we did, more robust, that's what we did, then I think you're onto a winner.
Okay. Billy, what makes XDC Network? So you are the first blockchain network to join the TFD Initiative, and that also created some nice buzz on the Twitter side, at least, because we don't see too much talking about blockchain on LinkedIn. It's more a Twitter game here at this stage. But what makes XDC Network suited for trade and supply chain finance?
Well, the network itself, XDC Network, is a hybrid blockchain. So we are both private and public. And that's one of the things that really from the very beginning was a key ingredient in having all of the pieces in place for enterprises to want to operate, because really you're able to operate on a private subnet where transactions like this in a smart contracts tokenization platform is able to operate privately with the participants that are there, and then having the transaction details, a limited set, actually relayed to the public network. So you're getting the best of both worlds with privacy and also immutability on a chain. But we're a layer one network, and so we have the ability to have smart contracts, which is obviously what our tokenization platform is based on. And that gives us a tremendous amount of flexibility in terms of creating smart contracts that really have all of the parameters and standardizations that are needed built into the transactions that are being done. So that's really one of the things that's enabled us to, really, as I think Ian's pointing out, not have the process be really any different on their end. But what you'll see on the back end, if you look in it, is that it's incredibly fast because we're 2,000 plus transactions a second network, and the cost of the transaction itself is like a percentage of a penny, 0.0001%. So we're extremely low cost and we're fast, and that means that when we move eventually to, because we're really kind of in a version 1 of really what we're doing with Tradetek. When we get to really the introduction of a stable coin and the ability to really seamlessly do everything 100% on chain, as opposed to where we started, where we did on off chain and on chain notes, you're going to see incredible speed in making these transactions happen. And I think that the friction goes away. I think, as Ian pointed out, one of the things that we talked about, if I have the number correctly, I think you're really turning notes every 42 days, roughly on average. If I'm not mistaken, I think when you're looking at a market where there's a lot of turnover in notes, the ability to actually do that more frequently and at low cost, I think is a really attractive opportunity for everyone involved really in the transaction.
Yeah, it's 45 days. Yes, you're close
45.
enough. So
I was close.
Very short. Very short. It got a little bit longer through COVID, but
yeah, right.
It's usually 30 to 45. And you're right. Underneath, in any given month, we're processing 5,500, 6,000 invoices. So, and that again, we expect to increase that by 100% by the end of the year. So it would be 10, 12,000, and every single one of those has to be dealt with, on an individual basis, with the same level of accountability as if it's $100 as it is if it's $10 million. So it is about being efficient with volumes.
Okay, and one thing I'd like to clarify, possibly with Niels, we often talk about tokenization of individual invoices, but I think here what you're applying is a tokenization a bit further down the process. So can you tell us more about where the tokenization process effectively starts compared to what is done on a classic node, repackaging node structure?
Yeah, I think it really depends on where you attach. There's two ways to do this. Sort of the more old school way would be to first produce a traditional security and then wrap this into a token, which is already a step forward. But of course, what we're building is the ability to issue tokens natively. And that's exactly where these factors that that Billy mentioned, that Ian mentioned, come into play: the speed, the efficiency, and also the reduction. And I think that's really sort of a killer feature, if you will, of this, is the reduction of settlement risk. Because even today, even if you go through a centralized securities depository, there is some settlement risk, and there is a delay in settlement. So the typical security settlement, even if it's done through an intermediary, through Euroclear, Clearstream, is T plus something. Maybe on our notes we can do T plus 1, but it's not uncommon to see T plus 2 or even longer settlement times. And that, of course, introduces an element of settlement risk. But what you can now do through the blockchain, through these tokens, is atomic settlement, which is basically you reduce the settlement time to the absolute logical minimum. It's instantaneous settlement. There is no settlement risk. And that reduces, of course, the time. The benefits are clear. If there's an originator waiting for funds to be deployed to their corporates, they don't have to wait for this. Time is money, and waiting for funds to go out is a real cost to a business, especially if interest already accrues. On the other hand, it reduces the risk of non-settlement, of breakage, and increases the speed. Simultaneous settlement of multiple transactions becomes possible. So it is quite incredible. And this is exactly what we're introducing, and where we see the strength of this model.
Okay, so continuously improving the process, reducing costs, shortening settlement cycle. First time I heard about this T+3 was 20 years ago at Swift. Securities industry was already trying to shorten this. It hasn't been able to do that after 20 years. So I understand why capital markets are quite excited by blockchain and DVP settlement on chain, basically. But just for our audience to be clear, do we need the full invoice to become on chain? Or not at this stage?
In the first step, not. So you could produce a traditional participation in an invoice and then use that to produce the token. You can link and reference an existing invoice. And of course, in the current day and age, the underlying corporate will still want dollars, euros, pounds, fiat currency in order to pay their invoices, in order to grow their business, to use these funds in whatever way they use them. So there has to be a link, but everything from there then is done on chain and can be processed in the way that I just described. And the next step then will be taking this to a full on-chain settlement throughout, where the end user will also receive tokens that they then can spend for goods and services. So this is, I think, the next level. But at this point, we're still have to bridge between the old and the new world, between fiat currency and tokens.
Yep. Okay. So that's why some of the expert talk about off-chain indeed. Processes remain as they are, and part of processes moving on chain, and gradually we will add more and more processes on chain to have a full real-time traceable process. So trying also to fight fraudulent activities, of course.
And I think you can already see from that, that's where sort of the crux of this is, to make it efficient even in the current environment, and building this bridge, this on-ramp between off-chain, on-chain in an efficient way that doesn't disrupt the process. And I think we all agree there are a lot of these blockchain projects out there, even in the trade space, that feel a bit artificial, if I may say, or trying to introduce elements that not necessarily instinctively make sense just for the sake of having the technology. And I think this is what we avoid. What we didn't do, we didn't go down that path, but we built something that added tangible value to everyone who was part of this.
Yeah, indeed. So the top value here is DVP atomic settlement. Is blockchain should not just be used as a communication system, as we have seen indeed initial bank consortia starting to use blockchain as a pure communication system. There is much more value to be extracted from a layer one infrastructure like XDC for traceability, for DVP settlement, and over time also, and maybe we can move now into the future to bring indeed more liquidity into on-chain liquidity into the trade finance asset class. So let's look into the future, what you're aiming to achieve in going forward. Ian, on your side, what are your plans? I mean, you joined ITFA last year, mid last year. You joined TFD Initiative. You started the first transaction, so it all went quite fast. What are you expecting from the whole community and definitely from those technology developments?
Yeah, so I think, as I was saying, one of the key things we're looking from IFTA is obviously access to funding. That's critical, and in order to fund the expansion of our book. So it's a great opportunity to meet that community firsthand in a group, and the conference in September is well worth attending for those that are thinking of it, because you do get to network if that's what you're looking for, with the right people. So, and then I think the technology that we're talking about this afternoon is also going to run in parallel with that, and I think potentially give us a broader access to investment communities. And that's very exciting because there is a significant barrier to entry from a cost base and from a size base. As we all know, it's easier to raise 50 million than 5 million for some unknown reason. So I think these initiatives give access to smaller investor groups, and I think that's really exciting, and actually gives better access with more traceability and transparency. So that's an improvement. They're not taking something on that's substandard. I think the interesting piece, probably the biggest blocker is the regulators keeping up with the technology, because I think, as we proved in September, the technology, as Billy says, version 1 is done. And will continue to evolve and build. And the interesting challenge for the market will be the regulators' ability to keep up, and because I think they will have a significant input as this new alternative market is opened up.
Yeah, and definitely we are well placed at ITFA to also facilitate at least regulatory advocacy. We're doing that on other fronts. So let's see what is needed on that side going forward. But first, let's hear from Niels and Billy. What are the product plans to help you get access to that enhanced liquidity, or to new pools of liquidity? So Niels, what is planned in terms of product enhancements to grow the benefits of the blockchain and XDC network in particular?
Yeah, the traditional distribution is still very much focused on the professional investor market, and is when you look at the notes and the restrictions that come around those, that makes sense. But with this new technology and the ability to have atomic settlement to service multiple investors at the same time, fractionalize these investments, broadening it to a much broader investor base, to retail essentially, is certainly something that is possible, and that's something where we spend a lot of energy together with the XDC team, together with Billy, on to make that happen.
Okay, and how do you see that your contribution, Billy, bringing new pools of liquidity? We hear about staking on the crypto side, so people are willing to hold their assets and put their digital assets to work. Do you think there is an opportunity indeed to bridge those staking options that we see growing in different assets to the Tradetek XDC Network technology stack and bring this liquidity to trade finance originators such as Accelerated Payments?
Yeah, I think that there's a great opportunity for that. I do think that, as we've been working really closely with Tradetek, and I think as Nils has really pointed out, that there's a lot of blockchain that's being created that aren't really necessarily focused on really solving the real problems that are happening out there. And I think that staking is one of the pieces that we feel is really important in the next phase, excuse me, of really moving forward and bringing liquidity into the system. And so there's a lot of factors that go into that, but we work first and foremost at looking at what is the need of Tradetek in the marketplace, and how can we fulfill that, and focus on real world solutions for what we're doing. And staking is a key component. So we have development teams that have been at the core of the smart contracts tokenization platform, working on solutions for staking. And we believe that that's a real opportunity for retail investors to have the opportunity to come in and take part in investment, within or supporting the ecosystem itself, which I think has been pointed out, really well by Christoph in some of our previous sessions, that you're really talking about an inflation-proof asset class that's very stable and secure, and I think it's a great alternative for people. And so we just really want to create the tools to open that up to more and more people, and obviously, as Ian points out, that's a very critical component, is having the ability to bring more of that into the marketplace. So that's a big focus for us.
And thinking from the investor side, I mean, you can, as a private individual, you can invest in almost anything. You can invest in student loans, you can invest in credit cards to your liking, better rated, better risk, less attractive risk, more high risk. You get auto loans, anything, mortgages, of course, subprime mortgages, anything gets somehow sliced and diced and put out to the capital markets, and you can invest in it. Trade finance, arguably the oldest asset class in the world, and something that everyone is familiar with, because whatever you see, whatever you buy has at some point in some form been touched by trade finance. If one merchant gives the other 30-day payment terms, that's trade finance in its most basic form. So everyone is very familiar with trade finance on one level, but on the other, it's not accessible, and that doesn't make a lot of sense. But it has historically been an asset class that has been only been distributed to banks, and then later on to non-bank investors. We see that more recently, actually, but now opening it up to retail, this is where it needs to go, and really establishing it as an asset class, just as any other asset class: mortgages, student loans, car loans, what have you.
Yeah. So we thought we would. Our vision was only to make trade finance accessible to institutional investors, but actually what we're saying, we're going much further than that and making it accessible to retail through indeed mechanisms that are based on the latest technologies such as digital assets and blockchain. Do you see any, back to Ian's point on the regulatory side, regulatory obstacle here to deliver your enhanced technology stack and to tap into the retail space, or is the current regulation sufficiently complete for you to deliver what you want to deliver?
Yeah, I think there are good regulatory frameworks out there already. We're looking at a number of jurisdictions. We're active in Luxembourg. We're also active in other European jurisdictions. And there's a good understanding, at least on the side of the lawmakers providing the framework. Of course, then the regulator has to apply it, and that's not quite uniform yet. But I think, at least in the EU and EEA, there are jurisdictions with very strong, very robust frameworks. And a lot of this goes along the lines of traditional securities regulation that then gets basically taken and put into place in an analogous fashion to affect the framework for these new assets. So there's a lot of know-how out there, and I would say some regulators are a bit further ahead than others. But overall, we think that having an offering that is robust, that is regulatory compliant, is very important, because only then you get that broad uptake. So,
yeah. I think if I could just kind of add to that, kind of going back to the point of how we work together. One of the challenges that you have with regulatory in the crypto space is that you really need to have partners who are, or integrations and services that are already under some kind of regulatory body. So we really work together with Tradetek, and we identify what it is, the path that we're moving towards, and what participants are out there that we can bring on that can handle some of the things that we're doing. And be under some type of regulatory framework. And I think that probably in itself is one of the bigger challenges that we run into. You can have a path forward as to what you want to do. Then you need to look at, where can you do it and who can help you do it. And I think that if you're looking towards what 2022 has to offer, I think you're going to see a lot more players coming in who fall under some type of regulatory body, and it's going to become easier to expand jurisdictions in time. So I think it's really a great time to be doing this, because we're really getting the technology down really in advance of regulatory being clear just across the globe. And so we're going to be in a great situation as we move forward, with that.
What is the timeline for those next developments? Is it 2023, 2024?
Well, I mean, we're looking at, yeah. So, I mean, we're continually looking at what we can do. I mean, some of the things that we're working on are, front and center. So there are, custodians that are, working under, regulations within a particular jurisdiction. And, we're working to onboard with them. And, the timing of that is really predicated upon the need, and also the amount of time it's going to take to do the integration, and whether I say the need of the partner, custodian, or integrator to have that service. Everyone's focused on different aspects of what they're trying to do in the marketplace. So I think the short answer is it's hard to tell. I would say that things have developed very quickly in 2021. There was a huge development challenge, and there still is for a lot of enterprises out there. Even today I was in a conversation where, there's, multiple projects waiting to get integrated into something. And, we're looking at, well, how can we, ensure that, we're at the top of that list. And so, these are constantly things that you're trying to, work your way through. So I think that 2022, we're going to see, significant movement and more of these integrations coming on. And I think I would really hope that by 2023, 2024, you're really going to have a very, kind of robust global framework in place that it's may not be all tied together into one, but you have enough, I'd say maybe channels or, that you can operate in, where you can work with different partners and different jurisdictions and complete what we're doing here now. And what Nils mentioned, talking about Luxembourg, that's really, I think, the first, it's the next step, but it's like the first real sustainable step towards really making this happen, under jurisdiction that is really friendly to supporting businesses and, you know, bringing things on chain.
Yeah, I think there are quite a few things that we will come out with this year together with XDC, and I think that's really where the strength of our collaboration lies, is that we're both tech businesses. We understand technology, but we also, and that's something that we feel very comfortable with, because we have always been regulated on the Tradetek side in one way or another. We feel very comfortable on the legal tech side, if I can call it that. And I think that's a crucial ingredient that goes back to the previous point. You have to be able, not only do you need this regulatory environment, the legal environment, but you have to understand it, you have to feel comfortable with it, you have to be able to use it. And I think bringing together the technology, the real technology, if I may call it that, plus the legal tech, that's something that not many can do, but it's something that certainly XDC and Tradetek can do.
Very good. So I have another question, but I first would want the audience to tell us if they have any question they want to bring forward. So in the chat, nothing special in the chat. So my question was on looking again on the regulatory side, which is critical for anything we do indeed. We see central banks working on CBDCs. So I guess this is bringing money on chain, CBDCs. Are CBDCs then compatible with what you're doing here on the TFD technology stack? Could we integrate CBDCs for settlement in the distribution mechanism that Tradetek and XDC Network have built?
Yeah, I would say absolutely. I mean, this is an open ecosystem. I think that's really the key. You know, we're not, I should say, we're looking for as many players who want to play in the sandbox to come and join us. And I think that CBDCs are really the step ultimately that will open up all of this to as many people as possible. You know, meaning right now we have a pool of people who they're in the digital asset space, and these, as Nils was pointing out, you know, just trade finance itself as an investment tool, a vehicle, is not accessible. We're making it accessible, but as we move forward, having it be accessible within the digital asset space is really key to, I think, having a very robust, fast, and efficient system. So CBDCs, in my mind, only help that case, because now if you have central banks across the globe that are actually working to support the digital side of what we're doing, it'll be that much easier for everyone to on-ramp and off-ramp and to settle within it. And we can create settlement of pretty much any token. It's just a matter of, incorporating it or, integrating it into the chain.
No, absolutely. I can only support that. And we're doing this. We're running a business, and what we're doing here is we do it because we think it makes commercial sense and adds value. And this is not a science experiment or trying to be extra purist about something. So if there are elements that add value to what we do that make sense, then we're very open. So I wholeheartedly agree with Billy.
Yeah,
and I think also, Andre, we shouldn't get, there's so much progress we can make within the existing regulatory environment. I think that's also, so, we could easily set up a fund next year for 100 million. And if that was established and it was conditional on using tokenized platform, that problem will be solved in 3 months. So it's, and that's well within the existing regulatory framework. So I think it's really important for us, as members here, to make sure we do make significant progress this year. And part of it's just going to say, well, what can we do within the existing rules? And the answer is a lot. I mean, again, when we started our business, we used family office, high net worths as an access. And again, that's all accessible in the existing environment. And that's very significant pools around the globe that typically wouldn't have access to some of the traditional notes market. So I think there's a lot we can do immediately and keep this momentum going without creating a dependency on the regulators who will get there in the end anyway, but there's much that can be achieved this year.
Okay, that's very good, because it's not always the case that technology can bring its benefits immediately on other tracks, like the negotiable instruments. Someone raised a question on MLETR. Well, that's exactly the point, where the laws have to be upgraded with the model law for electronic transferable records. The Law Commission is very busy on that front, and we hope to have a parliament vote in the UK this year on this. But this is another track whereby indeed the change of the law is critical to move the market. So it's good to hear that here, although the technology is very advanced, but the current regulatory framework is sufficient. And I know Sarah Green at the Law Commission is already has worked last year on digital asset also framework to move things further on the digital asset and the tokenization side. So there is already work ongoing, or there has been work ongoing last year to move things forward where needed. I don't know the details, but that is all in the hands of the Law Commission for England and Wales. Okay, very good. So just one question here I see in the chat, someone asking, and we haven't covered that, whether we need to identify the identity of the various token holders acting as funders into those transactions. I guess that's part of standard KYC processes, Billy?
Yeah, I mean, as it is right now, getting to token holders is a future that we're working towards, with, the, release 2 and beyond. We have in the process now, a very rigorous KYC process for anyone that's coming on in terms of doing the lending. And there will be online and efficient ways to KYC for token holders, when that system is ready to go.
Okay, very good. So standard processes, even if the money is brought through tokens versus fiat currency, but all the other capabilities and requirements remain the same. So that's good. I see no other questions. So as we are coming to the end of this session, I'd like to thank you for sharing your recent expertise and experience and growing expertise in this particular innovation of tokenization, and so to bring liquidity to supply chain finance platforms. Thank you, Ian, for featuring as the early adopter of the innovation.
Sure.
And let's look at the future product developments that Niels and Billy will bring. And looking forward to inviting you on another webinar in the coming weeks, months, once you feel you're ready to share more about this tokenization offering. Thank you very much, Niels. Billy.
Yeah, thank you. And we'll certainly keep you updated and the community updated on all these exciting developments. So look forward to the next session.
Yeah.
Thank you all. And thanks
very much
to all participants for joining us today. Bye-bye.
Bye-bye.